trading world has turned into a complete circus of illusions. Everyone's chasing a holy grail. Everyone's copying someone else. ICT, SMC, Enigma Algo, Planet Alignment, Turtle Soup. It's all just different names for the same recycled theories. Nobody thinks critically anymore. Everyone's hunting certainty in the environment that lives and breathes uncertainty. That's the real addiction. The illusion of certainty, the drug that keeps traders trapped. But then the truth appears simple, raw, absolutely undeniable truth. Someone slams 700 contracts into the bid on NASDAQ and price reverses instantly. No prediction, no algorithm, no theory, just pure cause and effect. Aggression meets absorption. That's when you finally see how the market truly speaks. What if you could see that shift in real time? What if you could read the moment the market rejects aggression and flips control? What would your trading look like if you stopped chasing certainty and started responding to what actually matters, to what's actually going on, when you start responding to the truth? And the reality is that most traders never do. They argue, they debate, they complicate, they want to sound smart, not to get smart. They want comfort, not clarity. They forget that markets aren't code. They are life, chaotic, alive, unpredictable. Until you accept that, you'll forever chase certainty in a world that was designed to be uncertain. But the moment you see properly, everything changes. You realize the market isn't random, it's rhythmic. It breathes, it expands, it contracts. Each move is energy, absorbed, released, and recycled. Your job isn't to predict it, it's to read it, to move with the rhythm, not against it. That's when chaos turns into flow. And I used to be like most traders. I used to chase every method out there, be it ICT, SMC, supply and demand, indicators, different theories. I've studied everything that's out there. I thought more knowledge meant more success, but it only meant more noise. Everyone was saying the same thing, just rebranded, renamed, repackaged. And I realized the industry doesn't sell truth, it sells comfort. So I burned it all down. I stripped it all down to the basics, bare and bones. No indicators, no fake illusions and theories and ramblings of the madman. Just pure market structure, just supply and demand. But I still was missing something. And that missing piece is the order flow, is seeing what the big buyers and sellers are doing. So that's why I'm now combining the market structure and the order flow, the absolute essentials of the price mechanics and movements. And when I stopped chasing the Holy Grail, I finally started seeing reality. What is really going on? So in these videos, I'm trying to help you so you can have the same paradigm shift, so you can have that click in understanding the paradigm shift, reading price in real time and adapting to it instead of predicting and getting attached to your bias. It's all about adapting and not predicting, flowing with price, trying to understand what are these big buyers and sellers are doing. So we continue to dive deeper into the market structure plus order flow. And here's a simple framework on how to actually apply this to your trading. So number one, identify the context. That's your market structure, support and resistance. Identify the key price levels. Number two, spot the event. Look for the big size, large order prints, imbalance. Look where the big players stepped in. Try to understand who is winning the battle, who is in control, buyers or sellers. Number three, interpret the reaction. Did it absorb or extend? When the big buyers or sellers showing on the tape, are they winning the battle or are they losing? Are the buyers absorbing the sellers at the support level, or they giving up and the seller aggression wins, creating imbalance, creating the displacement, the real displacement in price? Because when the aggressive buyers or sellers win the battle, the price displaces. Price goes from balance into imbalance. So once you see that absorption or expansion, you go to the step four. Wait for the structure shift. A simple confirmation with market structure shift. Let the market confirm the reversal. And number five, enter on the retest, because patience creates precision. You will not catch every move. Sometimes there will be no retracement and price will run without you. Sometimes there's going to be a very shallow retracement. But the more you execute this way, the more you practice this way, the better you're going to get at that execution. Because the knowledge is one thing, you need to apply that knowledge. And only through the experience of applying that knowledge, you will develop that wisdom and intuition. So let's explore some examples. These are all going to be that happened last week. Yet again, I'm going to point out that I'm using Motive Wave software, and the indicator is big trades. This is the indicator that shows aggressive buying or selling. It means that somebody executed the sell order at the support at the very low over here, but the price, instead of moving down lower, confirming this aggression, instead of creating displacement lower, price reversed immediately. This means that this seller was selling into the support where the passive buyer absorbed this whole 700 contract order. The price didn't move even to sweep the low. This is the true move origin. This is how you confirm that there are actual buyers at this move origin. Without knowing where these big sellers came in, without knowing this information, there is no way for you to tell if this move origin is going to hold. But when you see that there are 700 contracts were executed at this low and price didn't move but reversed, it means that this seller got absorbed. And when this happens, you will see a reversal. This is how you have confidence that this break of structure over here is not a false break of structure. This is how you get confidence on entering this retracement. And also, if you look closely, this is an SBS. On the lower time frames, it's already 1 minute chart, but I can guarantee you that if you zoom in into the 15-second chart, you will see an obvious SBS. This is the SBS model 1, and also it's a sweep into the imbalance. So when the price reverses immediately after this seller get absorbed, you have all of the confirmation that price is reversing and this move origin is holding. So what is the next target? It's going to be this high. And you can't see it on this chart, but then we move up even higher and higher. And I actually took this trade. I took it over here on this little pullback and I traded this move up. I have a full recording of this live execution. I post them in my private community for Stoic traders. You can join us at stoicedge.com. But here's what happened later during the day. So after that reversal, price just kept moving higher. And towards the end of the day, this was another interesting setup. So these sellers were trying to short this high. But price did not move lower. Price moved higher. So this means that these sellers were absorbed and price continued higher. So there were more aggressive buyers than sellers in this area. So when the price comes back to the zone, the buyers are going to be protecting this level. So this in itself creates a level of support. So you can see where the price comes in to the level, you have a reversal. Price makes a higher high, price comes back again to this level, and over here you can see sellers trying to push price down. But instead, sellers get absorbed and we move up higher. So when the price comes down to this support area that was created by these sellers that got absorbed, it just means that there were more buyers and buyers were more aggressive to push this price higher. So it becomes support. Especially after this low, we coming back to the support, trying to break the low, but then price reverses. So what happens is that these sellers got absorbed, price makes a break of structure, has a retracement, and continues higher, and slams into resistance. So now these buyers getting absorbed and price has a retracement. So the reversal sign is sellers getting absorbed at the support or buyers getting absorbed at the resistance. And very simple trading setup here. You wait for the absorption, you wait for the market structure shift, and you enter on the retracement. The same thing, sweep, trigger, entry. It's the same setup that I always preached, just with different framing, with different names. And it's so funny to me, like people accusing me that I'm strategy hopping. If you open your eyes and put your ego down, you will realize that I'm refining the same understanding over and over again. It's all about balance, moving to imbalance in order to seek new balance. Consolidation, expansion, consolidation. It's all about the same flip. That's the trading setup. The flip, the market structure flip that I talked about in my early videos on YouTube. That's the same thing. Sweep, trigger, entry. It's the same flip. We have the low, high, lower low, higher high, higher low. That's the flip. It's all the same thing. And all the additional information that I'm providing is going to be around the same understanding. These are additional tools for you to have a better confirmation, to have more confidence behind your trades, more conviction behind the trades. This is how you build a narrative of what price is doing in real time. So let's move on to another example. This was the same day on Friday, but during the London session. So you can see the price goes down, right? Then we have this flip. We have the market structure flip. Break of structure, price goes up, break of structure. So we have this pullback into the support. So, right? So this used to be resistance, becomes support after this break. Simple market structure logic. Now, when you see 400 contracts here and price does not move lower, this is absorption. Somebody absorbing the sell order of 400 contracts. It's a big order. And price does not move lower and makes a lower low. Yeah, we have a sweep over here. It is what it is. Not everything is perfect in trading. And maybe you can argue this was a break of structure. And if you entered on the pullback, you got stopped out. Okay, so what? It happens, right? And that's why market is not programmed by algorithm. Because if it was programmed by algorithm, every setup will work 100% of the time. But it's not, because market is the auction. But the point here is that the support held because the sellers were absorbed, and that's why price moved higher. And this happened during the London session. So without seeing the sell order, how do you know that we are going higher and this is not just a retracement and we're going to go lower? That this is not a manipulation and we distributing and going down lower. How do you know without knowing that this sell order was here and it got absorbed? Because once you put down all the theories, all the fairy tales, and just simply observe the market structure and order flow, you will see clearly and you will understand the price with the high degree of certainty. Of course, complete certainty doesn't exist in trading, but when you see a big sell order and price doesn't move lower but reverses, that's your sign. So here, break of structure, pullback, continuation higher. The same thing, sweep, trigger, entry, continuation higher. Let's move on to another example. Here's the October 16 leading into the New York Open here, leading to the 8:30 news. We have big buyers here. There is bunch of circles, so there are multiple orders of big buyers. So price eventually goes up higher, makes a break of structure, and starts consolidating in here, right? Creating this SBS sequence that I teach. You can look it up on my YouTube channel. I dive deep in detail what this means. So price trades higher. There was a big seller, and then maybe that seller got out here at break even. So we can cancel these orders out, whatever. But the point is that price dropped and stopped at this level. Why did price stop at this level? Is it because some magic fair value gap or magic planet alignment? Or what happened? Or is it time of day? Why the price stopped at this level? Is it just a coincidence? Or maybe there was aggressive buyer that defending that price level now. It couldn't be that simple, right? Or maybe it is that simple. This consolidation was an accumulation, a move origin that started a breakout. Price comes back to test the move origin and continues higher. Interesting, isn't it? How can you trade this? Well, you maybe can enter at this level and put your stop loss below the lows and then trade this move up. You can do that. Or when you see a large sellers here getting absorbed, that's also a confirmation. But in this case, there was no like large sellers that got absorbed. You can use this over here, these sellers that got absorbed because price pushed higher. You can use them as the support. But the point is that aggressive buyers bought, consolidation leads to expansion. And look, even these little consolidations leads to expansion. Consolidation leads to expansion down. Consolidation leads to expansion up. Consolidation leads to expansion down. Consolidation leads to expansion up. That's all market is doing. Consolidation, expansion, consolidation over and over and over again. But when you combine it with the order flow, when you combine it with big trades, you will actually understand what is happening. Let's go to another example. Here's what accumulation looks like. This was during Asia session, as you can see over here, 8 o'clock. So this is Asia session leading into the London Open here. So what happened here? Price moved down. We got buyers absorbed. Buyers couldn't push the price higher. We got aggressive sellers creating displacement. This is the real displacement. And displacement coming from aggressive selling. So when the sellers have a follow through, it will create a displacement. That's the expansion of the move that we are looking for. Yet again, this was consolidation, break, retest, expansion. Buyers absorbed at the support, expansion. So price comes back up into the same zone. And now these sellers that push the price lower with the aggression, now they are defending this resistance level. They are creating the resistance. And you can see price comes up and you got sellers coming in, aggressive selling to push the price down. Price comes up, aggressive selling, price comes down, and eventually makes a breakout. But while they're trying to push the price down, these buyers are accumulating. They are buying, aggressive buying. Eventually, we have a breakout, sellers trying to push this down. We have a retest. And on this breakout, we absorb these sellers. So now these sellers becoming support. We have a London Open, price goes down lower, retesting support, and makes another leg higher. But this is also consolidation, break, retest, expansion. And a lot of times what we're going to see is the measured move, which is leg number one, pullback, and leg number two. Let's go to another example. Here's another SBS. We have a 930 open over here. Price drops violently, even has a pullback and drops yet again. So a lot of people gonna be shorting this because we have the breakout structure, we are moving lower, a lot of volatility. And at the moment, you might not realize that this is a move origin. At the moment, you might not know. There is not like, aggressive buyers in here. There is no aggressive selling in here. I mean, there are some red bubbles, but they are not significant because we have these big sellers over here. And the bubbles are relative. But price drops violently, testing the move origin. We have big sell orders coming in, but no follow through. They got absorbed, price reverses. And you can see once it reverses, there's hardly any opportunity to get in. Because now, after this absorption, this is a squeeze. That's why you don't see pullbacks in here. It's a squeeze. One side was wrong and the other side made money. So this is the anatomy of the 930 opening move. When you see a sharp move down, look to the left. Maybe there is a move origin, maybe there is a structural support, and observe the tape. Do you see sellers trying to push down lower and they can't? That's the information you need. That's the timing that you want. Not a specific time of day. Oh, it's a 9:49 and I'm gonna execute my trade because it's a special time when the algo delivers the price. What a bunch of nonsense. Open your eyes. Look at the price for what it is. Follow the price. Flow with it. Adapt to the market. Trade what you see, not what you think. Because you might think that price pushing lower, we have a break of structure. But if they cannot push lower with these orders like this, with this big size like this, if they can't push it lower, it's not going lower. It's going the opposite way. That's the true anatomy of reversal. And for the last example, we have 930 open here. Price consolidates. This is a retail graveyard. Everybody trying to time the move, time the moon, time the breakout, but price consolidates. And if you can just find the consolidation and wait for the break and retest, your win rate will be way better, I promise. But we have this breakout and there is no follow through. This retest failed, right? We didn't have a higher high, retest failed, and these buyers were absorbed. The buyers tried to push price higher, but sellers absorbed it and we reversed. We have that break and retest over here. Price moves lower. We have a little SBS. Price moves lower. This is trading itself, and I actually traded this. I have a recording for my private community. You can join us at Stoic Edge if you want to see my execution and more in-depth explanations of the order flow and market structure. But I was watching these sellers and I was still holding my trade. I was trying to understand what price is going to do next. Because if these sellers absorbed, the price reverses. But if they not absorbed, it creates displacement. So when I see a big sell order, and I actually entered it over here and I was trailing my stop loss behind the SBS, but when I saw this seller, I got excited. My stop loss is protected over here, and I'm waiting to see, are they going to blast through my stop loss and I'll be stopped out in the profit? But instead, I saw another leg down. I saw the displacement and I actually took my profits around here. So aggressive selling created the displacement down. This is where the sellers won. They won the battle and they pushed the price lower with that aggressive selling. So when the price coming back, these sellers are going to be defending that level. And that's what you see over here. You got trapped buyers. You got buyers over here. Could be used as a support. And you can see how this break of the support leads to the another expansion. So you can see these sellers didn't get absorbed, creates a displacement. So aggression leads to displacement. Absorption leads to reversal. As simple as that. When you trade like this, you stop gambling and start observing. Every trade becomes a mirror of your discipline. Every entry, a reflection of your control. You are no longer a victim of emotion. You are a true Stoic trader, aligned with reality. That's where peace and profit coexist. If you are done chasing illusions, done worshiping algorithms and following blind narratives, join us. Inside Stoic Traders, we build systems grounded in truth. We focus on discipline, clarity, and execution. We don't trade fantasies. We trade what's real. Remember, the market isn't your enemy, it's your mirror. Every hesitation, every mistake, every stop loss, it's just feedback. When you stop fighting the uncertainty, you stop being a victim of it. You start flowing with it. And that's when everything changes. Because the real edge was never in the indicator, it was never the algo, some secret code. It was in how you see it. It was your perspective. It was your paradigm. And my whole goal and mission is to shift that paradigm and to shine the light on reality and what actually is going on behind the price. So, with that being said, thank you for watching, and the only way is up.